Hello, everyone. My name is Helen Georgeski, and I am a new real estate investor in the San Francisco Bay Area. I'm looking to fund purchase of distressed properties, renovate them, add value, and then resell them for a profit. And so today I'm trying to call up various different hard money lenders out there to see if they work with new real estate investors. In trying to find loan programs that will help me reach my profitability goals. One of the I think that the myth that is going out there that it's difficult for new investors, especially with no zero flip experience, to obtain hard money loans to fund their flips. So I've talked to probably 2 or 3 now, and they have been very accommodating. And I wanted today to share with you my call that I'm calling Acolen. It's the name of a lender that I had found out from filling out the Picker Pockets request to see if there's lenders more accommodating, or they have experience working with real estate investors, or whether they have like loan friendly terms. Okay, so I am calling Ryan from Acoland. Let's see if he can help us. Okay, 201-643-6650. Let's see.
Thank you for calling Acoland. If you know the extension you are trying to reach, you may dial it at any time. Otherwise,
So obviously I'm put on hold.
Acoland, this is Ryan.
Hi, is this Ryan Bug? This is Helen Georgeski. I think that I got your information from email that you sent me.
Yes.
Yes. And I'm just following up on your call. So I'm a new real estate investor. I'm looking to fund purchase of and rehab of fixer-upper properties in the San Francisco Bay Area. And so I'm interested in learning more about your hard money loan program. So I was hoping you could provide me with some information and answer a few questions. Is that okay?
Absolutely. Yeah, absolutely. I'd be happy to.
Okay. So my question is that, so you do provide fix and flip to California, like, right? Loans to.
That's correct. Yes, we do.
Okay, and then also for single family homes.
Yes.
Oh, okay. Do you lend to new investors? Currently, I have not had any flip experience. I have several projects that I've done on my own. Is that like a problem, or?
No, it's not a problem. So we have a specific program for new investors. So it will be slightly lower leverage than what we would give to like someone with 2 or more deals in the last 3 years, but it's still a program we offer, and the pricing will still be about just as competitive. So.
Oh, okay. Are there any minimum FICO score requirements for new investors?
For new investors, we do typically like to see at minimum like 650.
Okay, 650. Okay, and like you mentioned, no experience required.
That's correct.
Oh, okay. Can you walk me through your loan process? Do I when let's just say if I'm interested in trying to get a loan pre-approval letter, do I fill out the information online on your website, or do I?
Yes.
Yeah.
So our website has 2 things. So we have an application where if you have a specific property in mind and you have the numbers in front of you, that'll come to us and we'll create a pricing quote for you. And if you want to proceed, we'll issue you a term sheet. The other thing we have is a pre-approval portal, which takes very generic information about a property you're looking to purchase, and it'll kind of do a default pre-approval letter. It defaults to 75% of the cost, so that's not to say that's your maximum loan amount. That's just how pre-approvals work, because there's no underwriting or due diligence done. So you can go 2 routes. You can actually start underwriting a deal that you're under contract with, or you can just do a generic pre-approval letter. Depends what you're looking for.
Oh, okay. So for the pre-approval process, what sort of documentation would you require from me?
So all we really need to do is, for your first application, there's going to be what's called a second app. It gives us your personal details like your primary residence, contact info, and then social, and the term sheet allows us to run a accredited background check. So once we have those two items cleared from underwriting perspective, your borrower account is approved. So then we can issue what would be called a conditional loan approval letter. So that's something that is more specific. It includes our loan amount. It includes, the due diligence has been completed. So that will be more specific to the loan itself. The pre-approval portal, you can drop in any address and it'll be more generic, but it would still show us as the lender that you intend to proceed with.
Oh, okay. So for the pre-approval ones, would you need to have somebody come in, go out to the property and let's say determine what the ARV would be, or is that done online, like an automatic online?
It will be, so for the underwriting, doing the property analysis, it will be an in-person appraisal, but you can do your standard generic pre-approval letter without any documents. You just fill in some information, it comes to us, and then we click approve. So, but during underwriting and seeking actual funding and closing, we will need to perform a full appraisal.
Oh, okay, a full appraisal. And for that, like, what are the typical documents that you would like to see from me for the actual underwriting?
To order the appraisal, we'll need the executed purchase contract, so signed by seller and buyer. And then if we're doing rehab as well, like if we're doing a fix and flip, we'll need a scope of work completed, and we have a template available, because those two documents get submitted with the appraisal order.
Oh, okay. And then the rehab template. Okay. Yeah. Do you require things like let's just say last 2 months bank statements, W-2, IRS, tax returns and things like that for the underwriting?
So we'll require 2 bank statements primarily for identity verification. We'll consider funds from, retirement accounts, shared accounts, investment accounts. They don't need to be in your personal bank. Those are primarily used because banks go through a good, set of identity verification steps. So those are going to be part of your personal document requirements. And then, and then for in terms of IRS, so we'll need evidence of your social security number. If you have a copy of the card, that works. If not, then we would need to verify it from a document that's issued by the IRS, and that's just for verification purposes.
Oh, okay. So it's so the bank statements and all that, are they and let's say the IRS form 1040, would you require, so that's just to require to show that there's funds in my account, like reserve requirements? Are there reserve requirements to
the commingled bank statements, whether they're investment accounts or personal, are just for confirming that the funds exist for reserves, yes, but IRS form or social security card is just part of the identity verification.
Oh, okay. So as far as for the bank statement, let's just say, do you have reserve requirements for, I know that there's some lenders who require to have let's say 6 months worth of interest payment showing in their bank account that they have that much funds. Do you have those kind of requirements?
We do have that requirement for a DSCR loan, which is more long-term, would be 6 months. For fix and flips, we usually need to see 3 months of interest at the minimum. Okay. And as far as the bank statement, do you take, let's say, the value of stock investments that I have in my portfolio as part of that that goes towards that documentation amount, minimum reserve? We do consider investment accounts as well, and we have a breakdown of essentially the percentage of value from each source. So something like cryptocurrency, for an example, we would consider 50% of that value just due to its volatility. but obviously your traditional investment accounts, we consider the full value in most cases.
Oh, okay. So that can take as like part of the proof that you have that
Yes.
3
Yeah,
months
we can
worth of
look at a
interest.
variety of assets.
Okay.
Exactly.
Oh, okay. And then what is like the average time to close, or we to submit all of those documentations?
So we can easily close a fix and flip loan in less than 2 weeks. Ultimately, we're realistically waiting for the appraisal. Usually takes about 5 business days to come back to us after it's initiated. So I mean, in theory, if we get the appraisal back, within a week, and we get a clean title, we can schedule closing within 2 days after receiving the title. So somewhere between a week to 2 weeks if we're kind of on a tighter time frame. But ultimately, on average, I would say 2 weeks.
Oh, okay. And the maximum loan to value, what would that be for new investors?
New investors, we can cover up to 80% of the total project cost and up to 65% of the after repair value.
Okay.
So those are the two leverage indicators, and those go up by 5% each with more experience.
Oh, go up 5% by what for each flip?
So once you have experience, then we can go up to 70% of the ARV, but for new investors, it's 65.
Okay, 65% of ARV and 80% of the project cost. You mean like of the rehab costs, right?
We consider the purchase and the rehab.
Oh,
That's
purchase
the hard
and
cost of the project, yeah.
okay, purchase plus rehab. That's that 80%, right?
Yeah,
Okay, got
that's
it. Okay, got that. Yeah. And so you're saying the minimum down payment of that is typically like 20%, right?
Yes, that would be the minimum down payment. It ultimately, obviously, with each different scenario with unique figures, will present a few different options, but the maximum would be 80%. So yeah, minimum down payment for new investors is 20%, correct?
Oh, okay. Do you accept, if you use, let's just say that minimum down, 20% minimum down payment. How about if I use, let's say, a private money lender or something like that, another form of loan to fund that down payment? Do you allow that? Like, some don't allow stacking loan, a second, position loan to fund the minimum down payment. Do you allow that?
Yeah, on our platform, we don't allow subordinate liens or second positions, so that would be out of your liquidity or reserves to cover that 20% rather than another lender.
Okay, I'll make a note of that. So I'm not allowed to use second loans to fund the down payment. Okay, got it. And what's the maximum loan amount that you lend on the fix and flips, especially the new investors?
So we're going to be at a maximum of $3 million for your typical, 1 to 4 unit residentials. That does increase with multifamily properties, but that multifamily would require experience. So in this case, it would be at $3 million.
Okay. And the minimum loan amount do you lend out?
Minimum for fix and flips is $115,000, 115.
Oh, 115. Okay, got that. And the interest payment, are they interest only, like the repayment during the rehab period, or is it principal plus the interest?
It is interest only during the loans period, so we won't need any principal until the payoff of the loan.
Okay, got it. And how about the points and origination fee? How much would that be?
So we don't charge origination. That's honestly why people come to us. We're, especially in California, one of the only lenders that don't put points on our loans. So that's taking your standard terms. So fix and flip with no points is going to be a 12-month term, and minimum interest would be 6 months. So long as you complete the project in 6 months or greater, there's no penalty. If you were to finish the project sooner, then it would be the remaining amount of months of that minimum term. So if you finish after 4 months, we would need 2 more months of interest. So for projects where you have a shorter timeline, we can charge anywhere from a half point to a point at either reduce that minimum term or just eliminate it altogether.
Oh, okay. So like the seasoning period with no penalty is the 6 months, right? And then
Correct, and that's with no origination.
oh, okay. And then the prepayment penalty, if we were to finish before that, will be half a point for each month, right? For
It would just be the remaining months of interest in that minimum term. So if you finish 2 months before the 6 month period, then we would just get 2 months of interest.
oh,
So
okay.
it's not a fee, it's just whatever remaining interest of that 6 month term is.
Oh, okay. Okay, got you. And then, like you mentioned, I'll be only responsible for the interest due during the holding period. Let's just say if it was a 12-month loan, and then let's just say I finished 6 months, I would only be responsible for the 6 months worth of interest and not the remaining 6 months, right?
That's correct, yes, because you would have satisfied the minimum term. So there would be no additional cost other than the payoff of the loan.
Okay, got you. And so, like you mentioned, you're saying that there's no points, right? Is that what you're
Yes.
saying? No points or closing costs. Is that also no closing costs or?
So we do have some closing costs. So primarily, it's going to be the servicing setup and legal from our side. So that generally is, depending on the size of the deal and the complexity, it ranges between $1,750 to $2,500, and that's a one-time. There's no ongoing maintenance or service charges.
Okay.
So that's for the life of the loan, and it's not collected up front. It's not due prior to closing. It's typically just deducted at the HUD settlement.
Mm-hmm. Oh, okay.
Yes, and in California, we require a licensed mortgage broker, so that costs a quarter point typically. So those are the only costs associated with the closing.
Oh, okay. When you say deducted at settlement, is that at settlement of the sale of the property or settlement of the at the when we sign the loan agreement?
It's when we're funding. So at the settlement, you will have your purchase loan, and that servicing wire setup fee is just deducted from the balance that's wired at the closing.
Okay, got you. Yeah. And then the minimum loan term that you have, like you already mentioned, it's you do offer 6 months loan, or is it the minimum is 12 months loan?
So 12 months is the minimum total term length, but if you want a shorter minimum period, for instance, if you wanted only 3 month interest term, we can do that with half a point. So not only would it buy down the minimum period, but it would also reduce the rate. So let's say if you were at 11% for no points with 12 months and 6 month minimum, you could pay a half point, and that 11% would go down to 10.5, but you would also only need 3 months of minimum interest.
Okay, got you. So you have
our
like
buy downs also get you a rate reduction, so there's a benefit to either side of the coin.
okay, with rate reductions, got it. Yeah. What are the collateral that you require to secure the loan? Is it just the property, or is there additional collateral?
So it's the property, but since we don't loan directly into a borrower's name, there's typically a new LLC. The way that 99% of our clients do that is they create a new LLC for the purchase, and that way the only thing owned by the LLC is the property.
Okay, got you. Yeah, and then can you walk me through your draw schedule? How does that work? Is that like a advance for the first draw, or is it based on the scope of work that I give you, and how does that work?
Yeah, it is based on the scope of work, but ultimately we'll secure and provide the draw reimbursements on your schedule, depending on how you set it up with your contracting team. So essentially, there's no advance, but it's going to be phases of draws based on work completed. So after each phase of the project, you reach out to our draw manager we have a construction draw request form, and then we organize the inspection so that we could release the funds. And we just repeat that process. And you're welcome to take as many or as few draws as you'd like, depending on your budget and the complexity of the project.
Oh, okay. And then the drawer manager, so for the portion of the loan that it's related to the rehab, so am I gonna be just charged interest from when I draw the funds, or am I gonna be charged for the whole, you know, interest on the whole rehab from let's say from day one? Or is it just charged when it's being used, you know, start accruing interest when I use the funds?
So interest traditionally accrues on just the funded amount. So the purchase loan from day one is what you'll be paying interest on, and then as you take out draws, based on how much of it is funded, that will increase the total amount that interest is being paid on.
Okay, okay, got that. Yep, that's amazing. Do you know like what the turnaround time for that you do for funding doors? Is there somebody that comes into the projects and do a inspection before that you know, and then submit documents to you, or how does that work? Or do we take pictures and send it to you guys?
We do have an inspector verify that the work's completed, and they then submit the report to us electronically, and then our construction draw department approves it. So usually we can have a draw funded within 48 hours as well, assuming there's no delay in getting the inspection done.
Okay, so it's like about around 48 hours. Okay, from receiving that completed inspection from the inspector. Okay.
Mm-hmm. That's correct.
Oh, okay. Do you do like extension? Let's just say that the loan for 6 months, and then it turns out it's 8 months. Do you allow extensions, and how much is your additional interest for the extension?
Yes, we do allow extensions. Ultimately, it's by application. So we have our servicing department that reviews the extension request. Usually very easy to get the first one. The second one's never guaranteed, but obviously, assuming, you know, progress is being made on the project, it's typically approved as well.
Oh, okay. And how much is the interest for the extension, the additional interest? Do you increase the interest by, let's say, 1% every 3 months kind of thing, or?
So there is a fee for the extension. I will need to follow up with you from our servicing department just to confirm the amount, just so that I have the accurate figure for you. But I'll be happy to do so.
Oh, okay. That will be awesome. Yeah. Okay. And then, like you mentioned, there's no advance for the first draw, right? It will be.
That's correct.
Okay. Got that. Trying to think about something else like so you mentioned about the scope of work, right? If there's like a template, would you be able to send me that template for like the scope of work that you like for the rehab?
Yes.
So that way I could be more prepared. I think that when I'm going to submit documents, I make sure that I know what I'm actually supposed to be submitting, what are the things I'm required.
Yeah.
Okay.
So I'll send that to you in the same email with the confirmation of the extension fee.
Okay, that will be awesome. Thank you so much for doing that.
Of course.
Yeah. Was there anything else like that I need to consider? Like, the interest rate percent. How much do you typically see for, let's just say, somebody with the minimum FICO score is at 650, that it's a new investor? How much typically the interest rate is for that?
For fix and flips, on average in that range, we're probably going to be somewhere between 1080 and 11.1.
Okay.
With that for no points pricing, obviously you can assume, 50 basis points reduction if we're reducing that minimum term.
Okay, so 10.8% to about 11.1%.
That's correct. Yeah, and obviously with experience, and if we're kind of closer to a 700, we can go as low as 10.5. It just depends, scenario dependent.
Okay, FICO. Okay, 10.8.
But considering the parameters on the specific deal, we'll probably be somewhere around 10.8.
Okay, got you. I think that I left that almost to the last. I almost forgot to ask that. That's a very important one.
No problem. Yeah, we definitely, we like to stay very competitive on interest rate, because ultimately, we assume starting this relationship now, we can be part of your future projects too. So.
Yeah. Oh, okay. Yeah. Was there any other information I think that you think it's important that maybe I had did not ask but maybe should have asked it, or something that is specifically it's specific to new investors that I should take into account?
Not necessarily. To be honest, it doesn't really complicate the process of the loan. It just, obviously the parameters of what we can lend are slightly lower just without experience, but it doesn't add any complexity to the loan process.
Okay.
And then once you have one deal, obviously that opens you up to the higher ARP funding for the next project. So what I will do is I'll send you a brochure specifically for the fix and flip stuff, just so you can read through it, see if anything in the FAQs kind of pops up, and if you want additional info, we can always answer those questions that pop up later.
Oh, okay. Thank you. So the application process, can I submit that online? Is that like on your website?
Yeah.
I know that some websites have it, and then I could see what might be the interest quote might be on there, right? Is that something that I could do all the way on the process online and see the interest rate, and then be able to pull a pre-qualification letter online?
So you can do the pre-qualification letter, but it won't include an interest rate. It'll just include the property address, the purchase price, and a estimated loan amount. For us to get you your exact pricing, we have to review the application and run the numbers in our system. So it's quick. We always respond promptly, but it's not going to give you like an instant interest rate, just because bridges and fix and flips are so dynamic based on the market. So we are able to do like estimated instant rates for DSCR, just because they're much more mathematical. But yeah, you can submit for pre-approval anytime. So my email will include the application link as well as the pre-approval portal. And you can utilize both of those. So.
Oh, that would be great. Yeah, and then probably have in there the documents that I would need to provide for the pre-approval letter, as opposed to the documents required for the actual pre-underwriting, right?
Right, yeah.
Yeah, okay. That sounds like a plan. Well, do you have my email? I think you sent me a email.
Yes, I do.
Yeah.
So I have hpmginvest@gmail.com.
That's correct.
Perfect.
Yeah. Well, thank you so much, Ryan, for your time. I really appreciate it, and I really look forward to still keeping in touch. And then property comes up, and I'll definitely hit you up. For that. But
sounds great, and you should get that email from me shortly as well with all the links.
Awesome. Well, you have a great day. Okay.
Thank you. You as well. Take care.
Take care. Bye.
Bye.
So you see, I hope that was pretty useful for you. Again, like, I'm a new investor, and so if you think that there was something that I should have asked the lender and I wasn't asking it, please feel free to send me a little comments down on the bottom, and I'll be happy to try to ask that next time, or forward that over to the lender to get more information on that. Like you see, it's pretty easy and straightforward, and they don't want to complicate the process, and they're really like basically falling over themselves trying to lend you money. So so there's hope for all of us newbies out there who got zero flip experience. It's just that they double down and make sure that FICO score is there, and obviously they can, and some lenders, well, not with Ackland, but the other lenders I talked to in the past, they do allow for you to use loan products to stack on top of this to fund your fund the down payment. Okay, and hit me a like or send me a message down below, and I'll talk to you guys again. Thanks.